everyone, John Henry here, slingshotfutures.com, and welcome to the daily futures market outlook for tomorrow's trading. Tomorrow being the 23rd of the month already, narrowing into the end of the month pretty quickly here. And this is where we put together a plan of attack for tomorrow's trading on our favorite futures markets. Now, when we're looking at all of the markets today, first of all, there were a couple markets that didn't go anywhere. Good old crude and gold hanging out in the background there. And then we have markets like the indexes that had quite the rip higher if you were watching those today. So plenty of opportunity across the board. But as always, before we jump on in, make sure to swing on over to slingshotfutures.com, scroll down and click on the Join the Daily Outlook newsletter. That's going to let you sign your email up with us, so that we'll be notifying you every single time one of these videos comes out, along with the grouping of videos. We go over different futures markets, we go over different stock markets, we go over the crypto markets, all kinds of fun stuff, so make sure that you sign up for that Outlook newsletter. Along with that, if you haven't done so already, make sure to click on the live trader and subscription and trial info, and that will let you sit down with us with a 3-day trial. You can sit down with us for a couple days, see what we're all about and how we approach the markets. It's a great way to just kind of see what we're all about and doing every day. But along with that, you can ask questions, you can see my screens, you can see what's going on throughout the entirety of the US morning session. It's a really good way to see what all is going on. So if you haven't done so already, make sure to sign up for the 3-day trial. Now, taking a look at the euro first, the euro had a little bit of a tumble earlier this morning, but when we came into the US session, everything quieted down pretty heavily. The movement to the downside seems to have been a little bit halted, running into an issue right around that 76.50 area. We pushed through weekly support, but after weekly support was broken, not really much else happened. They tried continuing down a little bit further below that weekly support, now in this case turned resistance, and then support, and then resistance, and then support. Really choppy around that area, forming a range or a wedge. It all depends on how you want to draw it up. I think both are totally fine, but the wedge seems to fit just a little bit better. Now, the euro has had quite the just rocky move all over the place. There hasn't been a good amount of consistency, not like we've seen, you know, earlier in, or well, I guess later in July, with that good consistent movement to the upside. We've had a big move down and then went nowhere for 2 days, and then they tried to get a big move down and then went nowhere for another 2 or 3 days, and then a big move up and then we went nowhere for a couple days. We just keep getting stuck in these kind of nowhere moves, and now this time we had a big spike up and then a big spike down, and now we're going nowhere. So really, from what the market is telling us, we should expect to see another day, maybe a half a day if we're lucky, of chop and slop and lack of movement, and then a potential breakout again. That seems to be what the market wants to do lately, is stall for a couple days and then go nuts again. So the overall movement that we're looking for here, likely going to be range bound, and I'm looking to sell given the overall downward pressure that we have so far. Now, I don't want to sell too far down to the lows because obviously nobody is interested down there. We're not getting any continuation at all. So I'm looking to sell up at 17,880, up to 18,015, and then if they really want to give us a good treat, 18,225. Probably not going to get that though. 17,880 might even be a little bit of a stretch at this point. But if they do give us at least these two, these are potential areas of interest to sell into to drive an opportunity of the market dropping back down to those lows. Maybe for a range, or maybe we finally get that breakout like we've seen in the past couple days. After a couple days of range, we get a little breakout. We'll have to wait and see. But looking to sell some better prices here on the euro. When it comes to gold, gold looked like it was going to be another good market with some pretty good downside momentum all the way in the early European session. At about 3 o'clock, though, it died. It went completely sideways, just totally flat, and it's been kind of abysmal ever since. They had a little bit of a rocket ship to the upside. Nobody believed it. Shoved it right back down to the lows. Nobody believed that. Bought it right back up, and here we land right in the middle of everything. So really, this kind of gives us a scenario of, if we're up in this high area, nobody believed them, so they sold aggressively. If we come back into here, that is a selling opportunity waiting to happen. The same thing goes with down here. If we can come back down to the, you can kind of look at these as value areas. The market will see value in buying here and value in selling up here. We're just kind of stuck in the middle right now. So we have to treat this as a range, even though it's not a picture-perfect range like we would like to see. Well, it didn't want to form that way. So we're looking to buy low, sell high. but preferably in those value areas of interest. If we zoom a little bit further out, we can see that we are kind of pinging off of that major area of interest on the bigger picture, so I would rather be a buyer on the downside than a seller on the upside, just given the amount of support that's come in here, not only in the short term, but also in the much larger term as well. So I think the buy side makes a lot more sense if we can get a push down below 89.1, and then we're looking for a pop back up into value where it makes sense to start exiting. So pretty straightforward game plan on gold. Not really a whole lot that we have to worry about there. Over on crude oil, this one is a little bit of an oddball one. We had some pretty good movement. Nice bull trend in the morning, and then a nice bear trend in the afternoon, or well, I guess early morning, going into later early morning, and then right before the 9:30 open, this monstrous bull candle shows up and just takes back everything that happened. So we had a rally to the upside, making a new high, a drop to the lows, and now we pop back to the new highs again. So we have a cyclical market that is indicative of a range that is telling us to expect the market to potentially fail all the way back down to the lows, or at least make an attempt to. But then we ran into a little bit of a snag. The market hasn't gone anywhere. This is the same place that we were at 10 o'clock this morning. We haven't moved out of this location. They tried. It didn't work. They tried going higher. That didn't work. And then they just kept getting narrower and narrower and narrower until we're now just sort of landing flat in the middle. So the overall movement that we're getting right now, they could be waiting for the API report, which is actually just coming out right now. That's why you see the candle acting the way it is. That could be the catalyst that they're waiting for to break out of this, but right now, it doesn't look like anybody has any faith on either side of this market until we get a little bit more information. The overall bigger picture, it's not surprising to see that lack of conviction given the fact that they gave back everything from Friday, or nearly everything. We've got a little bit more to go until they give back everything. But for the most part, they gave back a good 80%, maybe a little bit more, of that bullish move up all the way back down. And now, to me, at least, it looks like sellers are using this as an opportunity to build into a longer position to continue this reversal down. Now, again, the API report that's coming out right now and going into inventories tomorrow could definitely throw things for a little bit of a loop. But in the bigger picture, giving back everything from Friday is much more bearish than I think this market is really alluding to, and we could have an overnight trend that continues to the downside. So look for selling opportunities. I would much rather look for selling at around 47.94 to 48.15 to try to grind that market down in the overnight into the US session tomorrow. And then finally, the index markets, the S&P. Man, the S&P was a rocket ship today. Just an absolute beauty of a market to be trading today, and that goes for the Dow, the NASDAQ, all over the place. Opportunity galore when you're looking at the index markets. Pretty much, I mean, you could just slap the buy button today and you'd be all right, but we really didn't start kicking off until around 9:30 when the open hit. When the open hit, we had that big pop higher, and that led into a spike up, pretty obvious spike there, into a spike in channel. Now, generally speaking, when you have a spike in channel, the major area of interest for a deep, deep pullback is going to be where that channel point started, but that's all the way down at 24.40. You're talking about giving back a good chunk of the profits on the way up. That might not be that easy when you're talking about the S&P. Now, if it does, that 24.40 area is a phenomenal area of interest for an opportunity to buy in long and hang on for quite a while. But looking at the way that the market is forming and just the fact that it's so aggressively bullish and we haven't really even had a pullback, mostly just kind of sideways, even sideways to up, there hasn't been that pullback yet. So because of that, buyers are going to be drooling over pretty much any quote-unquote deep pullback that they get, and that could be as low as 24.50. What I'm really looking for and hoping for is 45.75. Of course, if they can be really generous, then 24.40. But looking for any of these areas to act as support to rocket ship the market back up towards the highs once again for a finalized bullish leg. So that's going to do it for the outlook. Now, in terms of news tomorrow, we do have a couple things. It's a lot better than today with nothing. Tomorrow morning at 3 o'clock out of the Eurozone, we have ECB President Draghi speaking, so be careful if you trade the European session in the early morning. Outside of that, though, tomorrow, for the U.S. session, not a whole lot to worry about. 10 o'clock, we've got some new home sales forecasted at 612,000, previous 610,000. And then, of course, at 10:30, we have the crude oil inventories. The forecast for the inventories is negative 3.45 million. The previous was negative 8.945. So that's going to do it for this one. Hopefully you learned something, and, you know, maybe you got a little bit of a game plan going on here. It's a little bit of an oddball one. A couple of the markets are going absolutely nowhere, and some of the other markets are getting really good trends, and then the other ones are trending really well in the Euro session, and then it dies in the US session. Got a lot of stuff that we can work with right now, which I am very happy for, to be sure. So, like we always say, make a plan, trade the plan, follow those rules, and we'll see y'all next time.